Welcome to today's market report. European stock markets are seen opening sharply lower on Monday as surging coronavirus cases prompted more restrictive measures in the region, while the US remains unable to provide fresh catalysts as election day looms ever nearer. DAX future traded 1.7% lower at 12,600. CAC dropped 1% at 4,900. FTSE fell 0.8% at 5,700. Europe continues to be hit hard by the second wave of the COVID-19 virus. France reported record new infections for the fourth consecutive day on Sunday. Italy also reported a jump in infections and has introduced the strongest virus restrictions since the end of a national lockdown in May, while Spain is set to impose a national curfew, having declared a national state of emergency at the weekend. The news in the US doesn't make for good reading either. The country recorded the most infections of the pandemic for the second day in a row, adding another 85,317 cases, including aides of Vice President Mike Pence. Pence himself continues to attend election campaign rallies, while White House Chief of Staff Mark Meadows told CNN that we aren't going to control the pandemic. This is a dangerous moment for many countries in the Northern Hemisphere as cases spike. World Health Organization Director General Ghebreyesus said in an online meeting of the Berlin-based World Health Summit, "We still have a long haul ahead of us." Investors will keep a wary eye on the release of German IFO Business Climate Indicator for October later in the session to see whether these rising COVID-19 numbers are having an impact on confidence in the country's corporate sector. In corporate news, Siemens is likely to be in the spotlight after Bloomberg reported that the US private equity firm Carlyle Group is nearing an agreement to buy the German industrial giant's mechanical drive arm Flender for about €2 billion. SAP released on Sunday their third quarter results showing a 4% decline in adjusted total revenue, while operating profit fell 12%. The German software giant also cut its guidance for the year and abandoned its forecast that profitability would expand steadily over the medium term, saying coronavirus lockdowns would hit demand well into 2021. Concerns about the virus also hit oil prices. US crude future traded 2.6% lower at $38.81 a barrel, while Brent contract fell 2.3% to $41.10 a barrel. Brent fell 2.7% last week and the WTI dropped 2.5%, their first weekly losses in 3. Gold futures fell 0.3% to $1,898.85 per ounce. On the FX front, GBP USD extends losing streak into a third straight day on Monday, pressured by the downbeat market mood amid a rapid surge in coronavirus globally. The UK itself reported 23,012 new cases on Sunday, with the highest COVID-19 infection rates continue to be seen in northwest Yorkshire and the Humber and the northeast. Investors ran for safety in the US dollar amid the coronavirus resurgence, kicking off the risk asset, the GBP. Meanwhile, looming uncertainty over the likely US fiscal stimulus deal heading into the final week before the election bodes well for the greenback. The cable remains undermined by the Brexit uncertainty despite the resumption of the EU-UK negotiations last week. The main sticking point continues to remain over fisheries, with the French President Emmanuel Macron threatening over the weekend to retract from any Brexit deal that sacrifices French fishermen. A lack of relevant macro news from both sides of the Atlantic will put the focus back on to the Brexit virus and the stimulus developments. Meanwhile, the sentiment on the global markets will be closely followed. The immediate support for the GBP USD is placed at 130.07, the 10 and 50 DMA, below which is the 20 DMA at 129.78 would come into play. The euro-dollar pair finishes the week with gains around 118.30 at the upper end of its latest range, but still unable to define a trend. This week, the US, Germany and the EU will report their respective Q3 gross domestic product figures. It's all about economic growth. Polls indicate that US President Donald Trump's rival Joe Biden leads. Also, at least 50 million Americans have cast their votes in the current election, more than a third of the total votes from 2016. The one thing that's clear is that whoever wins, a stimulus package is coming, although its extent will define whether the greenback will remain pressured or change the course. The dollar index was up 0.2% at 92.972. This is today's market news. Thanks for listening. We'll see you next time.